Hi there and welcome. This webinar, we're going to be talking about the monthly cash flow for tax savings. Now, this is really important, but it's also one of the hardest concepts to grasp, putting together the tax savings plan. So what I want to do is spend a couple minutes with you walking through this monthly cash flow for tax savings. The first thing that, of course, we want to be looking at is where the money is going to be deposited. Now, this money could be revenues, could be commissions. However you're earning those revenues, however you're earning your monthly income, that where is this going to be deposited? Now, with an S corporation strategy, what it's going to be doing is going to be deposited into an S corporation. Now, this is really important to know because the IRS has a lot of scrutiny with the S corporation. The S corporation has to truly earn the revenues or the commissions. So if you don't have the money deposited into an S corporation, but yet try to kind of backdoor it into the S corporation, or at the end of the year apply it to the S corporation, it could be heavily scrutinized. So we want to make sure we're doing it right, where your commissions or your revenues are earned by the S corporation and then deposited directly into the S corporation. Now, this usually involves things like a 1099. If you're a real estate agent, talking with your broker about putting your commissions earned by the S corporation, and making sure that you have a separate bank account set up for the deposits for your commissions. So let's just say we're just going to make up some numbers here. I'm over here in the monthly cash flow. Let's say your revenues or your commissions every month are $10,000. All right, and what we'll do is kind of go back and forth between the visual aspect of it and then the number aspect of it. I'm going to use 10,000 because it's a nice, easy number that can be divisible by different things. So if you're only making 5,000 in commissions or revenues, just cut that number in half. If you're making 1,000, you just divide it by 10. Make it easy. All right, so commissions, S corporations. The next thing we do is how are we going to pay ourselves? How do we take that money out of the S corporation? Well, the first and the most important way on how we take it out of the S corporation is through what's referred to as wages. Now, wages must be reasonable compensation. And I have a reasonable compensation worksheet that I'd be happy to share with you. Just go ahead and contact me and I'll get that over to you. And then we'll run a reasonable compensation report. Now, the reasonable compensation report is going to make sure that we're able to get your wages as low as possible. And it's really important to get your wages as low as possible because that way you're paying the least amount into Social Security and Medicare. Now, of course, you might say, why do I want to take a low wage versus a high wage? You want to take a lower wage because you're going to be paying less into Social Security and Medicare, and you'll have more money to create your wealth, more cash flow to do other things with, instead of paying taxes for Social Security and Medicare. What's the problem with paying a high wage is you're paying more into those taxes. So why would you want to, or you might ask me, well, why can't I just pay myself $1 in wages? Well, the IRS has what's referred to as a reasonable compensation. They want you to pay at least a certain amount. I actually have a longer video. It's about 30 to 40 minutes long that talks about reasonable compensation. So go ahead, and if you want more in-depth information, check out that video. So S corporation is going to pay out wages. Who does wages? If you want a really good company that's going to hold your hand and help you through things, I recommend Paychex. My buddy Matt Logan at Paychex will walk you through the whole setup and process and get everything set up for you with very little work and labor on your end. If you want to save a little bit of money and you want to do things a little bit more DIY, if you will, I recommend Gusto. If you're interested in Gusto, want to use Gusto, let me know. I will send you a link so that you can be added to my partner portal. The benefit of being added to my partner portal is that I can look at your payroll. If you have any questions about payroll, I can go in and double check that payroll, make sure everything is coming out correctly. And you don't have to worry about sending me payroll reports or anything like that. I can just log in because you're part of my portal. All right, so the next thing we're going to talk about is wages. So what should wages be? So it's tough when you have your own small business, your entrepreneur, you're a real estate agent, your cash flow is very volatile. It can go up and down. So what I recommend to start with wages is between $2,000 and $3,000 to get started. So what I'm going to do is I'm going to put $2,500, and $2,500 is about 25% of this amount. So where this is 100%, your wages should be about 25% of your earnings or your revenues or your commissions. So try to get the wages about 25%. Now you might say, well, my reasonable wage is, let's say, $50,000 for the year. So if I do wages, this is biweekly. So if we do biweekly, we're going to be paying out 24 times for the year. So if we say, well, what is $2,500 times 24 biweekly pay periods? That's $60,000. So what if you do a reasonable compensation report and your wages comes out to 80,000 or 90,000? Well, but you have, this volatile cash flow. So you might not be able to pay, $3,000, $4,000, $6,000 in wages every biweekly period, right? So in that case, what I recommend is still do your wages, and then right after your biggest or your busiest time, go ahead and do a bonus or a large one-time chunk. And the IRS is totally okay with that, because what they're mostly concerned with is that end of year number. So on the tax return, the 1120S for the S corporation, there's a line for officer salary. They just want to see that there's something reasonable in that box. They don't really care when you paid it or the frequency that you paid it. So even if you want to do $2,500 every month, right? That gets you to 30,000, and then maybe your reasonable compensation in this is 40,000. So then right after your busiest time, maybe you have a really big commission that flows in September, and you've paid yourself 30, but you want to get to 40. You can just write yourself a check for the $10,000, and then make sure that goes through payroll. All right, so that is reasonable compensation and wages. The next thing that we're going to look at is reimbursements. Now, I have a reimbursement sheet in the workbook. If you don't have that, contact me. I'll send you the reimbursement sheet. But the basically reimbursement sheet is everything that reimbursements are everything that the business uses, but it's paid for or owned by or titled to yourself individually or personally. Three great examples of this is the home office. The home office is owned by you as the employee, owned to you personally, entitled to you personally. So you don't want to change the title over to your S corporation, title of the house to the S corporation, or sell your home to your S corporation. That'd just be silly. So the reimbursement sheet allows you to reimburse yourself for use of the home office. Another one is the vehicle, right? So if you just get started with an S corporation, you're going to use your personal vehicle to use inside the S corporation, but you're not necessarily going to title the vehicle to the S corporation. If you're thinking about buying a vehicle or thinking about retitling it to the S corporation, check with your insurance professional first, whoever takes care of your property and casualty insurance, and ask them what the difference between the personal individual plan and the business plan as far as insurance costs. Most of the time I've seen this anywhere from 3 to 5 times as expensive for a business to have the vehicle titled to a corporation or an LLC versus having it titled to someone personally and then using the vehicle for business. So make sure you check with that cost first and make sure that's not going to get too expensive for you, because otherwise you can just reimburse it from the corporation and you're going to get the tax write-offs anyway. Now, the reimbursements are important because the reimbursements are a tax deduction for the S corporation, but not taxable to you as the employee. This is really important because if it was taxable to you as the employee, then you would get a net zero benefit, right? Because it would be a deduction on the S corporation, taxable income, and then basically even itself out as a net zero wash. However, by doing it through the accountable plan reimbursements, you're able to write off all of those things. The other thing is a cell phone. So the three main things you're going to get on your reimbursements is your office and home, your home office, your vehicle, your cell phone, and then also like any personal credit cards. All right, let's say you have really great airline miles on your credit card, so you want to use your personal credit card for some of your business purposes, and that's totally fine. Just make sure that you add it as a reimbursement, and then all that is on that worksheet. So just do that worksheet on a monthly basis. All right, so your reimbursements, how much are those going to be? Well, it's different for everybody. Let me just give you an idea, an example of how much it could be. Let's say between your office and home and your vehicle expenses and your cell phone, it's, I don't know, let's say $700, all right? So let's say that's 700 bucks. This could be different for everybody. Okay, so what's next? So we have our money flowing into our S corporation. We're paying some in wages. We're paying some in reimbursements. What's next? Rents. There's a really cool part of the tax code that says that you can rent out your home or your personal residence for 14 days, completely tax-free. This is also sometimes referred to as the Augusta rule for Augusta, Georgia, where they hold the Masters golf tournament. There's not a lot of hotels there, so people will rent out their homes. Again, see the workbook for more information on the rent the home strategy. But basically what you're going to do is you're going to write a check for the rent of your home. And it's okay if you own it or rent it, doesn't matter. You're going to write that check from your S corporation to you personally. And on the memo line, you're going to write rent. And what's important with that is that you're separating the entities. You have a business entity, which is the S corporation, and you have you as your personal entity, which is you personally, and your S corporation is paying you personally rent. What are they paying rent for? Well, a great idea is once a month to have a strategy meeting. So where do you need to have a strategy meeting? Well, you could have it at Starbucks, but it's not very beneficial to have it there because it's loud and there's other people and you can't really talk or think because it could be loud. Or you could go to a Marriott or a Hyatt or a golf course club and rent a conference room, which is what a lot of businesses do. So what we can do is say, well, instead of going to a Hyatt or a Marriott or a golf course club, let's use our own facility, which we have available to us because we know the owner, and we're going to pay that owner the market rate. And the market rate is essentially going to the Hyatt or the Marriott or the golf club and saying, how much do you charge for a conference room? And that amount's going to be anywhere between $500 and $1,000 to rent the conference room for the day. So instead of going to the Hyatt or the Marriott and the golf course club and paying them $500 or $1,000, we're going to pay that money to you to use your home and your dining room table and your dining room for a conference room, right? This is totally legit. It's been through tax courts and it's in the tax code. So we don't have any problem with this whatsoever. Why do you want to do this? You really want to do this because it creates tax-free income. You can pay yourself anywhere between $500 and $1,000 up to 14 days every single year, and it's completely tax-free. So that's up to $14,000 a year of completely tax-free income. Okay, more information is on the workbook. So reimbursements, let's say rents. So let's say you do $750. You split the difference between the 500 and the 1,000. Again, the number is up to you on how aggressive you want to get, the market rate that you can find. If you want to, go to the Round Hill Country Club and the Danville Country Club, which is more expensive than, let's say, the Crow Canyon Country Club, right? Then it's going to be more. You can find places that are more expensive and find higher rents. The only thing the IRS is going to want you to do is to make sure that you have some sort of proof that you looked and compared these prices and you were charging a reasonable rent. If you charge $2,000 for one day for a conference room, that's unreasonable. So the IRS could challenge that and throw it out. So make sure you choose something that's reasonable and you have some sort of backing to it, like a a quote from one of those hotels for a conference room. All right, the next thing you're going to want to do is dividends. So dividends is kind of the last thing that comes out of it. So how do you pay yourself dividends? It's really easy. You just write yourself a check, right? That's probably what you're used to now. You're paying out yourself dividends. So what does the dividend check look like? Well, you start with the $10,000 in commissions. You pay yourself $2,500 in wages a month. You do the reimbursements for $700. You do the rents for $750, and that leaves you with $6,000, $6,050 of dividends. So what can you do? Just write yourself a check. Does it have to be one check for that whole amount? No. You can do 3 checks for $2,000. You can do 2 checks for $3,000. You can do 5 checks for $1,000 and leave $1,000 in there if you need some cash flow. You don't have to take out every single dollar out of the business. Even though you're going to be taxed on all your profit, you don't have to take out all of your cash flow from the business every month in dividends. You can leave some in there if you want to. It's especially important with cash flow if you're looking at growing the business and maybe you need an extra $1,000 or $2,000 in the bank account to do XYZ, something that's coming up, an advertising campaign or a bill that's coming up for auto insurance or something like that. You don't have to take all of the money out. You can leave some in there. But for this example, I just say you make a dollar and you don't want to leave anything in the S corporation. You want to take everything to your personal account. That's what you can pay yourself in dividends, right? All right. I'm not going to get anything too complex as far as taking out more money or more dividends. Basically, rule of thumb is if you take out a loan and you have extra money inside your S corporation, if you have a loan, then you can't take a tax write-off against that money that you use in the business to pay for your loan. If that's a concern to you, if you have any questions about that, feel free to reach out. Okay, now 2 other strategies we're going to talk about are the health reimbursement arrangement, the HRA, and then also hiring the kids. So what does that look like? Well, we can't do that under the S corporation, or if we do, then we lose some of the benefits. So what we're going to talk about is putting on a separate Schedule C. So here's a separate Schedule C, and then this Schedule C is basically doing some sort of work that the S corporation has a benefit for. So what are things that you could contract for a company, right? So if you're a real estate agent, what are some of the things that you would contract out for for professional services? How about bookkeeping and accounting services? Maybe advertising or janitorial and cleanup. So this Schedule C business can be any professional service or any service that can be provided to the S corporation. And then the S corporation is essentially going to pay the Schedule C some amount for that contracted service, right? So let's say that you want to do bookkeeping service, right? And you say, okay, what is a typical bookkeeping service? And let's say that that's 24. So let's say we're going to do $2,400 a month. Okay, what is that going to be covering? What is that going to do? Could do a number of different things, right? There could be bookkeeping, there could be managerial services, there could be janitorial services, right? So essentially that's the $2,400 that the S corporation is going to pay to the Schedule C for some sort of professional services or some services that the Schedule C is going to provide for the S corporation. So the S corporation is going to pay that $2,400 to the Schedule C. Now, why is that important? Well, what's going to happen is we're going to use some of that $2,400 to pay the kids, right? If you're not familiar with this, we're going to be paying the kids a reasonable wage to help out within the business, right? So let's say this Schedule C is janitorial services, right? So let's say $2,400, $2,400 a month for janitorial services may be a little bit high. So we may have to offer additional services to get to that $2,400. But what are we going to do? So let's say we have the kids, right? And if you're not familiar with this, the hiring the kids is is a great strategy that allows you to do tax-free income to your kids. Okay? So let's say the kids are going to be doing, let's say, bookkeeping services, right? So and janitorial and accounting and other things like that, right? So we can find a way to pay the kids $1,000, right? And that's just one. We can do that for one kid, or we can do that for multiple kids. But let's just say we have one kid. That'll make it easier. So we have one kid that has enough work that they can do, maybe even marketing or advertising. That'd be good too. You know, they do Facebook postings and Instagram and all those things that kids do, right? So let's say we're paying the kid $1,000 a month for the services rendered, right? And then we have another $1,400, right? So then that could be the HRA, the medical expense reimbursement plan, the health reimbursement arrangement, right? So let's say that's $1,400. What is that for? Well, that's essentially hiring your spouse inside the business and then reimbursing their health-related expenses completely tax-free. This is chapter 1 of the workbook. So all you have to do is fill out those forms, see what's deductible, and what you can do the reimbursement for. So let's just say that our reimbursements for a month are $1,400, right? So this gives us a couple more deductions here. And so what we're going to do is we're going to reduce the dividends by these two numbers because now we have more tax-free earnings, more tax-free distributions from the company, right? So in this case, we're now down to $3,600 of dividends. Now this probably is a lot. We covered quite a lot in 20 minutes, so you might want to go back and review this a couple times. I definitely want you to review this while you are doing your first set of monthly distributions or first set of checks, right? That's why I did this here, this monthly cash flow worksheet on the side, because I want you to follow along with this as you're writing these checks, as you see the cash flow, at least for the first couple months that you do this, right? So of course, make sure the commissions are flowing into the S corporation, right? Your commissions are 100%. What are your wages? Your wages should be about 25% of this, right? So if your commissions are 10,000, your wages should be about 2,500. How do the wages get paid? How do the wages get paid? The wages get paid with a payroll company, Paychecks, Gusto, something like that. So the wages are paid by ADP, Paychecks, Gusto, one of those guys, wages. Okay, what's the next check that's going to come out? So we did commissions, we did wages. What's the next one? Reimbursements. Reimbursements right here. What is reimbursements? Use the worksheet. That's your office and home, cell phone, personal vehicle, vehicle that's owned by you, not by the S corporation. You're going to reimburse yourself as the employee for the business using your personal items, right? The next one, the next check, rents. What's rents? The 14-day Augusta rule. Okay. Now instead of going straight to now what's going to be left over is going to go to your dividends, right? So in this case, what do we say? We said this was. So what we're going to do is because we said $2,400 is going to get paid to the Schedule C, that means less is going to flow to the dividends, right? So the S corporation pays the Schedule C. That money is going to go to the kids, $1,000 to the kids, $1,400 to the HRA. And then, so after the $2,400, whatever's left goes to the S corporation, wages, reimbursements, rent, and then whatever left over goes to the dividends, right? Now let's talk about this $2,400. The S corporation needs to write a check for $2,400 to the Schedule C, right? What does this look like? Well, the Schedule C needs to have its own business. It needs to have its own bank account. It should be licensed in the city that you're in. What is it going to do? It's going to do marketing services or janitorial or admin or accounting and bookkeeping, right? What the services are going to be provided is going to be based on this number. How much can we pay the S corp how much can the S corporation pay the Schedule C at a reasonable amount? How much can we put to the kids and how much can we put to the HRA? Now, if you have 3 kids and you want to maximize the paying the kid strategy, you're going to have to find something that's got $3,000, right? So who would you pay, or what company would you pay $3,000 a month for services, right? That the kids are going to be providing. That is a very tricky question that you're going to have to figure out, because you want to make sure that it's worth it for the business, right? So the kids, pay them $1,000, up to $1,000 a month, completely tax-free. The next one is the HRA, the health reimbursement arrangement. This is for a spouse. If you don't have a spouse, you can't run it through the Schedule C. You'd have to run it through a separate C corporation. We're not going to get into that. That's too much for this guy right here. But the health reimbursement arrangement through the Schedule C is if you have a spouse, that the spouse can then be an employee of the Schedule C, right? So who is the owner of the S corporation? You are. Who is the owner of the Schedule C? You are. Who's the employees of the Schedule C? Your spouse, your kids, or both employees. Who's the employee of the S corporation? Who's getting these wages? You are, right? So you're the owner of the S corporation, the owner of the Schedule C, and you're also the employee of the S corporation, right? Who's employees of the Schedule C? The kids and your spouse for the HRA. So what are we doing kind of to sum all this up? So we have the revenues, commissions, that's coming into the S corporation. Make sure you do wages through a payroll company. Your first check is going to go to reimbursements and rents. You're going to have a check that goes from the S corporation to the Schedule C for how much you're going to pay for those services. That money is going to then distributed to the kids into the health reimbursement arrangement through reimbursement to your spouse. And then whatever's left over that you want to distribute goes to dividends. All right, I hope that was helpful for you, and you were able to hopefully watch this a couple times because I went through it really quickly. And then also just make sure that you watch this as you're paying out these first couple checks for the first couple months, that you do this cash flow, because it's really important to get this correct, get this right. And once you do it a couple times, it'll make a lot more sense and you'll get used to it and building out this system. If you have any questions, feel free to contact me. Refer to the workbook. There's all the forms that you have to fill out for the health reimbursement arrangement, for the hiring the kids, for the rents, for the reimbursements, and then make sure you check with a payroll company for the wages. And I recommend Paychex or Gusto on that. All right, thanks so much for watching, and I'll talk to you soon.